He's a staunch advocate for democratizing stock market investing in the Philippines, heading up the Shareholders Association of the Philippines, or SharePHIL, as well as COL Financial Group. He aims to double down on pro-shareholder reforms and advance investor education initiatives at a time of national governance and accountability challenges. With us now in Thought Leaders, please welcome Dino Bate. Good to see you again, Dino. Welcome to the program.
Hi, Kathy. Nice to be here. Thank you for having us.
Last time we saw each other was at the SharePHIL event last August when you had as keynote SEC Chair Attorney Francis Lim, where he called on the full ecosystem to come and band together and deepen the capital markets. What have you done since between SharePHIL and your partners to do just that?
Yeah, just recently, what we did in SharePHIL is we launched what we had been planning for some time, what we call Project Rise, which is supposed to cater to the retail investor and shareholders to empower them to make smart investing decisions, right? And so we came up with a library of investing materials that can easily be accessed by people and be able to understand this, and hopefully simplify and equip them to be able to make smart decisions in investing.
Equip them with what?
With the knowledge to understand why they're investing, what these different products that are being offered to them, and how they should use it, and how they should, relate it to what they're trying to achieve, whether it be their goals and their risk profile. So with this, they will be able to now understand these products and use this for that purpose.
But why now, considering the governance issues surrounding the anomalous flood control projects? They're coming in at a time everybody is staying away from risk. The PSEI has just fallen 8% year to date, coming all the way from double-digit gains in 2024.
Okay, I think that has something to do with, of course, what is currently happening. But I don't think that's totally the real reason behind it. The market has not been performing for some time now, despite the fact that the economy has been growing much faster than our peers. I think the other reason why we're out of favor today is because of the companies that we have listed in our exchange, which is not something that people would like to get into, particularly because we're in the service sector, while what is really the theme now is looking for, in the AI space, semiconductors, that can cater to the growing demand for these products globally. And the Philippines does not have that. We're very domestically driven, and therefore they may perceive it as a risk because you're only a single market that you cater to. And you can see the companies that cater to the international market, such as ICTSI, has done very well. It's one of the top performing stocks now. It's grown more than, 30% this year. So you can see investors are rewarding companies that have a bigger, scope of, their business. They're not concentrated to just one market, which is the Philippines. Although we've done well. I'm saying we've been growing 5%, which is much better than our peers. But our markets have not just reflected that. So there's a disconnect.
That disconnect, how is
disconnect in
SharePHIL,
terms of our values are, the values are dropping while the companies continue to grow. Right? So the disconnect is people have no appreciation for this. They're looking for something that will actually perform in terms of appreciate, and that's what they're not seeing. All they're looking at now is that these companies are now, since they could remain profitable, they're now paying regular dividends. So they're looking at this parking facility to get dividends of maybe 5-6%, and some telcos are giving you 9% today. So it's attractive. But again, that's not what investing in the stock market. They want the exponential growth, not the,
But we did see that exponential growth, if you will, during the pandemic, and COL Financial in particular, a real beneficiary to that, a rise in commissions, revenues, and active investing.
Yes.
So it's not like they're not there. They are there. It's just that they kind of left. But,
yes,
but I wanted to track where they went next.
Yes, the pandemic was a great example. Although there was a deluge of a lot of investors who tried to open accounts during that time, but the stocks that they were buying were what you call the speculative issues. They were not going to the issues that were what we call more mature, because that was where they saw that gains weren't They were going to companies that had good narratives but may not have the earnings yet. And that drove prices because the participation was very limited yet, unlike the mature companies where they had all these institutional clients were in it, and that was the cause for the overhang in terms of shares. So yes, the pandemic created this hype, but it was not the traditional companies. It's more the speculative companies that drove it. So they were speculating is the word.
But they made money. And
Yes,
that got
they
them
made money
interested.
and
Isn't
even
that
lost,
the point
of course, in any transaction. Somebody
maybe
makes money.
jump-starting awareness, for
Yes.
instance? How then did you, if you did,
Yes.
make the most out of that? I mean, it's not how
Yes.
you wanted it to be, but it did attract interest.
Yes, that opened our eyes that there is what we call an investing revolution going on. People had money, and they were really willing to invest it, but they didn't have the proper knowledge. And because of what happened in the pandemic, this may have discouraged most of them from going to our market because they realize it's a Ferris wheel. It goes up, it goes down. So what's this? I mean, they were just discouraged because they didn't understand what they were doing. They were just going with what the meme stocks were doing, right? They were just following social media who were giving them tips that this stock was going to move and all that. And in the end, a good number of them eventually lost money.
Where did they go? Were you able to track the active investors? And how are the active investors right now
at the market, waiting for things
that's
to get
8%
better.
down?
They could still be in the market, but they're not adding anymore. You understand that they kept their investments, even if it's just worth 40% of its value from the time they invest, or even less. They got stuck. They don't know what to do with the investments, and so they're discouraged and looking for other means to grow their wealth. And after the pandemic, of course, we saw interest rates starting to rise. They now realize there's a better alternative. Maybe I should just go fixed income. Gives me 5-6%. Why take all this risk? So today, we're in that situation today, wherein we have great companies that are cheap, but there's an alternative that people can put their money without having to take the unnecessary risk, which is fixed income. Or what they call REITs or preferreds, which are now attracting this set of investors who have extra money set aside for investing, but they're not going to what you call stocks or the capital market that we were trying to promote. Right? They're going to...
But why is that? I mean, if the demand really is in other financial instruments, then that says a lot about the investing revolution.
Yes,
Maybe it's
yes.
gone in another path.
Yes, that's right. Fixed
and then they're
income,
making money out of that. So in a way, I mean, as an advocacy then, are you propagating just a specific financial instrument?
No, we're going
all out.
Across.
You're going stocks, bonds, ETFs,
funds.
maybe even derivatives?
Yes, because they all have to understand. Not all stocks are the same. Not all bonds are the same. Not all funds are the same. So therefore, you must be able to understand these instruments and how this relates to your objective and your risk profile. Right? There are some funds that they could be diversified, but they're highly leveraged, and therefore you have to be careful. Or they're in a market that is very speculative, or issues that are, what you call small caps. And this could you have to understand all of this. They're not all the same.
But maybe they do understand because we're talking about the digital revolution, the digital natives, where access to information is so much out there, and a lot, as you say, are self-taught.
Yes.
They came into the platform at COL knowing nothing, knowing zero, but then learned a lot more. Having been self-taught yourself pre-digital revolution, how then do we ensure access and at the same time be driven to the right information?
That's right.
Because there could be a lot of fake information out there that could mislead them.
Because of, the digital space, there's so much information now. Now, how do you now know which is reliable, which is, beneficial to you? They're not just there for their own, but they're really there to help you understand. They're not there to sell you something. So that's where the audience have to now understand, and that's what SharePHIL is trying to do. It's trying to be the go-to source for knowledge for investing, where we're there to just tell them what it is and understand what these products can do for them and how they can optimize the use of it based on their, again, goals and their risk profile. So that's what we're trying to do. We're now trying to bring in experts who are not there to sell, but to educate and empower them to make those decisions. And hopefully, when they're confronted by these products, they can now understand, what is this? Is this for me, not for me? Or if it is, this is what the risks are. Therefore, I should just allocate a certain amount of money if I want to get into it. There's no sure thing. You have to understand that investing is patience and discipline. It's long term. It's not, an easy, quick way to get rich. If they have that mindset in place, then I think you'll have a more vibrant, nation and more sustainable. We have to understand that what makes a country vibrant is the middle class, and that middle class is what we're trying to protect. And studies have shown the middle class will double in 2030. Now, how do we help them to be able to sustain this wealth and continue to, to grow the money that they're receiving today, during that time, and invest it wisely rather than lose it to something that may not be building wealth but destroying wealth, because
you're running up against a mindset, as you made a mention of mindset,
yes.
more of a cultural mindset, is
yes.
it not, that we're more of a consumer society than an investing one? So how do you actually pull away the thinking that I just want to spend on what I want rather than invest on what I have to?
I think there's a set of individuals at a certain age are the spending, but that's in the 20s. But when I think the 30s, when they have a purpose, they have family, they start thinking about the future and making sure that they can support the lifestyle and give back to, help raise their children properly. So there's spending. That's why our average age maybe today is in the 20s. That's the spending group. But I think when they start reaching the age of 30, where they have more disposable income, they start becoming less material but more purposeful in their spending. Purposeful meaning if they want to experience certain things, they'll be smart about, should we spend this, or we have to think about the future of our children. We want them to have the best education. We want to be able to provide a better home for the family and all that, or our care. So people are aware of this now, but that comes with a certain age. That's why I understand what you're saying, that the spending is because majority of the population is in the 20s today. But by 2030 or beyond, they'll start becoming wealthier, their careers will improve, they'll have disposable incomes, they'll marry, they'll have purpose. So that's what they have to do. They have to be able to equip, to be able to make those wise investments and sustain. Not only work hard, but grow their money, right? And hopefully widen that base.
And widening that base would possibly include the Gen A's at home. You do have a Gen A at home.
Yes, yes.
For sure, she's a little bit more knowledgeable than the rest.
Yes, that's right.
It's a little bit more knowledgeable.
Yes.
How do you take that on? If investing, saving, and just being mindful of your finances starts from home,
Yes.
how do you manage that as a dad?
The beginning is, I think it's really, you have to start with the basic. Financial literacy is not just about growing your money. It's also saving. Making them understand that, money is finite, and therefore if you want something that is, what you call a want rather than a need, then you have to know how to save for these things and set aside money for these things. At the same time, they should also understand that to hasten that process, you also can invest the money and grow it while, you're trying to build that amount that you're trying to. So you don't make money just stay where it is, but put it in a bank account or even in an investment account, like putting it in a brokerage account that they have. So it's that thinking that money is one that you receive, but it's also your responsibility to grow it and set it aside for something that, you want or need.
Have any of the kids started investing?
The older one is doing that now, and he's even giving us ideas on where the opportunities lie because of their mindset that of what they're doing today. Just a story, maybe 2 years ago, my son told me about NVIDIA. He said, "Pa, I'm a gamer. I'm telling you, NVIDIA is something that I really believe is changing the experience of gaming. You should look into it." And I said, "Fine,
Have you?
I will put money there."
Did you put some money?
Yes, but we'll take it out in 3 months. And he made money. He made 30%. He said, I made money, but that was still at where today it's 4 times its value.
So did you get a commission for that?
No, I gave it to him. I said,
You
this is your
did.
money. Because now you know, when you have ideas, you have to think about. So now they're also thinking about all these things now. They relate what they enjoy to opportunities to make money. Because they know there's a way to access this. It's not only the Philippine market, but the global market now. Whether it be things that gadgets that they use and say, this is a new thing, we should look at it. I think this is something that we should look at, and or games that they play.
It's
They
a
relate.
different mindset because
Yes.
I know that you're self-taught, but then you did have Lolo Vic help
Yes,
you out.
yes.
Vic Fabella.
Yes, yes.
He's one
Vicente
of the
Fabella, yes.
Vicente Fabella,
Yes.
a CPA,
Yes.
and one who struck it really
Yes,
big
yes.
because of copper investments.
Yes.
What did you learn from him those days when there weren't any online sources? You barely had anything to read, probably.
I think what we learned from it, which my mother passed on and encouraged us, was that, you know, although the stock market looks, like like it could be complicated for many people because of the kind of knowledge that you should have to be able to participate in it. Whether you have to have the financial background, or you have to have the connections, or you have to have the money. It just told us that, hey, it can be for everybody. You just have to understand how you apply this to your investing journey. And my grandfather just set aside money that he had in excess to put it in the U.S. market and in copper. He had no idea, right? But he said, I'm going to put here the excess that I have because I know it's not something that is for sure, but I have to hold on to it if it ever will be, substantial. And that's what it is, long-term investing. It wasn't, he didn't speculate and said, oh, the markets are going up, I should just put money. No, he just kept it there, kept investing on a regular basis. His broker was telling him, just keep investing. Copper is something that will, is a necessary commodity for economic growth because it was copper wires that they were using and all that. He didn't even think about the wire. The wire was just a bonus. Because the wire, they were creating bullets and they needed the copper. But at that time, it was just looking at a material that was used for industrial purposes. And there was an industrial revolution going on. And you can participate through these companies that are listed in the New York Stock Exchange.
So how much should we set aside if we were to
I
take
think
Lolo
the
Vicente's
the
advice?
amount is really relative to the person's ability to invest something that they don't have to worry about. I can tell you 20%, but some people, it's difficult. Some people can just do 10%. It's something that you have to set aside and not worry about. Because if it's something that you worry about, then it's going to be tough because your duration of shortens or is driven by an event that could be short-term. Give you an example. In 2008, my driver who was with me for over 30 years, retired at 65. And I said, for your services, I'm giving you 250,000. But I said, Manong, I'm telling you, this is not going to last long. You're 65, you can live up to 80. But you have to invest this money for you to be able to start. You have an SSS pension, which is 8,000, which is fine. But this money that you haven't received, let's just invest it. I said, what do you mean? Okay, so I said, give me the companies that you feel you patronize. I said, oh, I do Meralco, I do this, malls, all that, whatever. So we just divided it across and just left it there. And I said, don't worry about it. It's there. I'll give you a statement every year. At the end of the year, we can talk about it. But live within what you have now and leave this to grow. And to this day, it's more than close to 10 times its value. And he said, I didn't know that was the secret. I thought you had to see, Manong, it's just understanding where you're putting your money, and the compounding effect will do its work. So he said, oh, don't tell my wife about this money. I want to just, I will share it with her, but I don't want her to know that I have this money because I want to be able to provide for my family. Now his kids are everywhere in the world because they're in Canada, they're in Dubai, and he visits them. And his wife said, where do you get the money? Oh, my boss, Dino, just lends me money when I travel. That was our arrangement. But they didn't know he had an account. So what I'm just saying is that it's the mindset. You have to believe in what you're investing and the time. So it's not in other words, it does not have to be substantial. It's time that will compound it. small amounts on a regular basis will compound its value, but also understanding the instrument that you're using. Okay, so you have to understand, you have to have some knowledge of, it's not all stocks are the same, right? Maybe at that time he was fortunate when it started to, it was just the early stage of this bull market in the Philippines, but today it's a different story again.
It is a different story, and you talked
Yes.
about revolutions and how your son
Yes.
had actually looked at the gaming revolution
and
as
they're
a
looking-
point of investing. If we were to look at a revolution right now in the stock market or outside of it, where is it and where should people be?
No, I think the revolution is, okay, even today crypto's doing very well. I'm not really an advocate of crypto.
Why not?
Because it's unregulated, you don't know, it's not the mainstream, it's very, it's very informal, the way it's. So I'm not saying it's not a good stuff, but if somebody talks to me and says, but compared to your market, we've done very well, so why are you telling me it's not good, right? At the end of the day, confidence comes with performance, right? So it's done well. But I'm not saying, I'm not promoting it, but they should understand the risk too. And therefore, if you're going to get into it, you have to understand you have to also manage the amounts that you're putting, because these are high risk, high return kind of instruments, right? So if they understand that, then fine, right? Because they just don't go what we call uso, but they have to also understand what they're getting into. So it's really asset allocation, understanding the risk that comes with the investment. And if you know what that is, that's what it is. That's why, going back to my driver, he said, I don't need that money because we have enough. My kids are already in college, they've just graduated, so I don't need much. I can keep it there. So he's now, 80? And he's happy. He just calls me and says, I'm traveling to Canada. Can I get some money? Fine. Get some money. You can. This is yours. So it's that understanding about how money can work for you. In other words, hard work is important, but it will accelerate if you can also make your money work for you the same way that you do. Right? You grow your wealth and you have to set something aside for investment.
Well, make us understand why we're still the smallest market in the ASEAN. I mean, we're the oldest stock market in Asia, and I was just looking at the statistics. The capitalization is about 54% of GDP. That's significantly below the ASEAN average of 78%. What's kept us from growing?
I think it's the, it's also, it's also the difficulty of accessing these investment products. You can just see, during the heydays of crypto, they had about 8 million investors, where we only had about less than 1 million or even just 1 million. Why was that so? One, it was easy to open an account. You did not have to go through the difficulty of opening like a regular bank account, which is what we're being asked to do. And so people have to go through that process, and it's a long process. And people are discouraged. I want to do it now. Why is it so difficult? Right? While crypto was, just give me your email and amount, you can participate. That's also one reason why it's the barrier to get into this type of products. And access will be fixed income. Not everybody can get access to that. The banks are keeping it for the more wealthier clients of theirs because it's easier to talk to one client rather than 1,000 customers to get the same amount, right? So it's also access for those kind of assets like fixed income. It's not totally democratized today because people, if you want to buy a nice bond, you'll have to have a certain amount. No, it'll be 100,000, it'll be 1 million because it's not readily available. Not like crypto, which is fine. You want to grow it here, just.
Do you think the Floodgate scandal would restrict further that access that we're looking for to grow in the ASEAN
The
as a
scandal
market?
I think is, as I said, it's happening everywhere in the region. People have those problems, political problems, not only in the Philippines. But of course, it just exacerbates things here. I mean, the locals who have been investing for over 7 years have not seen, substantial growth in their investment because the market have not performed. So the scandal is just another icing on the top. That's why I don't want to be in the Philippines because look how much problems it brings, right? But if they were making money before, they'll say, oh, this too will pass. I'll just start buying now because it's cheap. Right? We know this too will pass. Everything will pass. And, the natural tendency of an economy is to grow. But even that, because it has not performed for such a long time, it's harder for people, even this generation, to get into it because to them, it hasn't made any money yet. I've seen it. I've seen, I've talked to my parents. They've said, "Oh, I never made money there. It's just too difficult." Or if I did, it was, because of the returns that I was getting from my dividends, but it wasn't that. So I think we need to try to ignite this by, hopefully coming up with good issues that can actually drive, again, interest and show that there could be money made rather than money not made in this market.
Well, we just had one so far.
Some of them have done well. I mean, the mining companies have done well.
Maynilad is coming on November 7.
Or even the last one was, I think, if I'm not mistaken, this company from Cebu.
Yes, Top Line.
Top Line
But at the
did
start
well.
of the year, the PSC was saying we'll have at least 6. But we're ending the year with just 2.
Because there's no natural demand. That's the problem. There's no natural demand. In other countries, they have what they call compulsory investing in their capital. Here, there's no. It's voluntary. And you have other alternative investments that they can now get into. As I said, my son will say, I know NVIDIA, but I don't know Maynilad. What is that? What is Maynilad to me? That's my grandfather's company. I don't know what it is. It's a mature business. But here I have a relationship with NVIDIA. I have a relationship with Microsoft, whatever it is, AI. I can see all of that because that's in my peripheral. And today, that's the problem. I mean, the companies that we're offering are the more mature ones and not helping other companies that are now maybe catering to this young generation that they cannot take. Whether it be, let's say, pick up coffee or whatever it is. This new startups that people are relating to. Oh, how can I access this? They have no access to that. All they have are the more mature companies that are already growing at a steady pace but not exciting anymore.
But policy is catching up. I mean, on July 1st, we had CIMEPA, the lowering of the stock transaction taxes. We've always been known to be one of the priciest, if not the priciest, in charging stock transaction taxes in Asia. But how has it done since? We've counted what? August, September, 3 months on. Has it made a difference?
No, definitely it has not made it. I told you it's really, I mean, it's good. I'm not saying it's great. But you wonder, why would people use GCash even if they have to pay 20 pesos? They don't care. It's easy access, experience, great. They don't care. They're not price sensitive. They're more, I want the experience. I want to be able to make money. If I don't make money, even if you bring down all the fees, I'm not going to be there. Why would I be there? My purpose is to grow my wealth. But it helps. I'm saying, don't worry, and don't get me wrong. It helps for the, but it's not the only answer. That's why even bringing down commission rates was not the answer. It just made it difficult for people who are providing the service to support the needs of these investors to be able to build their confidence, to educate them, to provide them that experience. Because now, our costs are all rising, but our revenues are shrinking because of commission rates are dropping. But that was
You mean for COL Financial?
For everybody, right? The cost of compliance is rising, but, business is not growing. So it's not that. It's not only that. It's having the right products that will appeal to this investor, which is built to make money and grow their wealth.
So what then are you doing to ensure you chase the money if they're not really just in
By offering them
stocks?
products that will actually...
Such as?
Global access to funds, thematic, investing through, to specific, themes, whether it be investing in China, whether investing in global markets, whether it be the healthcare business in the world, because we know people are aging and therefore they'll need that. So those are the things that will appeal to these people and say, I understand that. That's why I want, and if it's long term, I believe that's going to really be, the story that will last out, be a long, it has a long runway, right? In the Philippines, you say, oh yeah, the economy is growing. You promised me things will get better. Yes, the government's not lying. You're growing 5%. We're beating everybody, but it's not reflected there in share price. It's not. In other words, it's not there. So at the end of the day, that's the measure of, how exciting this instrument is today.
But does
sure,
that deepen the markets? I mean, the goal is to deepen the capital markets. If you're invested somewhere else, then that is an opportunity loss for the local markets.
It's not.
How is it not?
Because if you're going to teach them to invest it properly, whether it be another market or a more traditional instrument, you don't lose it. You don't want to lose it to something that is what we call very speculative, very high risk, because then you lose it completely, right? So you have to offer them what is good for them today, and eventually, when these two will get better, they will come back because they know, they understand that these are all part of a cycle, and that. But if you lose it to something else, that's really terrible, right? Then it's gone forever. You get, so you cannot be forcing them to put it in the market that does not, you know, deliver what it is. If that's what the requirement is to see whether I want it to be, you know, to perform over a period of time, it's not doing that for some time, and they want to diversify. Go ahead, but teach them where to put it, and continue that belief that investing is having the right assets for to match your objectives, and you know, allocating the right amount for that purpose, right? It's long term, therefore you have to understand that you don't put everything that you will need in the next 2 years in this kind of investment because it does not match it, and that's why people get discouraged about investing because they didn't understand what they were trying to do. They were trying to put short-term money for a long-term investment, which is wrong because nobody really can be sure about you know, what the future will bring. That's why there's a risk, and they have to understand. They can match that, then it's patient money they're putting. Fine.
Patient money without a timeline. You've
Without-
talked about
yeah,
this too
patient
will
money,
pass.
understanding. Yeah, this could be.
If we peer into
a
your
while.
crystal ball, if we can, where do you see the PSEI then by the end of the year?
As I said, if you look at it on a fundamental basis, it should be 7,000, 7,200 even, because of the kind of growth and the kind of valuations that it deserves for such performance. But because of other factors where money goes where there is opportunity, they might think that yes, you have that now, but any hiccup in your economy or any hiccup in your political environment can throw you off track.
So what's
because
the worst
it's-
case scenario then?
I think it'll just stay where it is. It's bottoming out now. But again, that's also not helping, right? That's not helping. People will say, okay, just call me when it's ready, when the market's great. Because Philippine market is more.
So it's just like them
Tactical,
saying, I'm not
opportunistic.
convinced that what you said, the index will still fall. I haven't really found the floor yet.
I think it has shown that. The 5-8 has held. The 5-8, but if it breaks below that, then it really becomes very attractive. But again, it may not grow as much as you want because there's still these headwinds that will create. And I think the biggest headwind today in the Philippines is interest rates. Because you can park it in the bank and get 5%, 4.5%, or even bonds that give you 6%. So what's that? Inflation is about 5, 4.5, 5. I mean, really, and your money's still growing. So, and I don't need sleepless nights to worry about what will happen tomorrow in the newspaper or what, you know, what this political environment will be. Who's the next president? I don't have to worry about that because I'm getting 6 at least, and I know these companies are going to be there, you know, beyond, you know, everybody's lifetime because they're very stable. They cater to.
So you're saying the Monetary Board isn't cutting fast enough?
But they can't because there's a problem also is that they have to worry about the currency. Because if they bring down the rates, people will go with other currencies that provide the same kind of rate with less risk, and that would be the US dollar. So they have to, it's a balancing act.
So they should have cut earlier then, before it became 58 to the dollar.
I don't think they could, I mean, the inflation is below 2 now, but again, they have to look at how this will, you know, affect trade and all that, because if our currency becomes too weak, how can we, we're an importing country, that's inflationary, what will happen? So it's always balancing act that they have to understand.
So how can they help the markets then? If it's a balancing act, they've got the
I
peso
think
to
it's
look
making
out
things
for.
available. I mean, as I said, you don't want the money to move out. You want them to keep it here, right? By making this now, even democratizing the availability of bonds that everybody can now buy and have easy access to, that would be one. Because that's keeping the money here, right? You don't want it to go out. That's the problem. You go out to do something else that may, you know, eventually lose its value because they didn't understand or they speculated or they were misguided.
So you're hoping for a pause for the rest of this year?
I think At the moment, until things, when the dust settles or things lift, whatever happens after, that would be critical here. And of course, if the U.S. continues to cut rates, we'll be cutting rates definitely. We'll just follow what the U.S. is doing because we've cut ahead. The central bank governor was very proactive. He cut rates even before the U.S. did. And I think that was very smart. It caused a little bit jitter in the currency, but that also paid off. They were able to contain it. People were worried, but at the same time, they saw the strength of the economy, and that's why people.
But the worry now is in growth and the potential that the weak investor perception now has on the real economy. So if
Yes.
indeed growth forecasts come off, he'd be forced to move.
He could be forced to move, but he has to understand that that could create capital flight, take people out of money here. They'll take it out because they're not getting the returns for the risk that they're taking, right? So that's why 5.5%, 5, or anything above 5% is okay. There's the risk, but I think the returns are enough to shield me from the rise of the cost of goods, right? So I'm neutral. I mean, I'm neutral in this, by keeping it here, and this is where I spend most of my income. So, but if you bring it lower and the currency starts to move, then they're saying my value of my wealth is shrinking because the currency is, and we're importing everything, so all the cost of goods will go up, and I can't afford it anymore. So it wouldn't be wise to just keep it here. I'll have to now ship it to other investments outside of the Philippines. So that's why you have to keep it here. I mean, that's what it is. You have to keep the money here, and hopefully that will, continue to create the velocity of investing and the mindset that people have access to, products here that can help them grow their wealth.
Have you found like maybe a good metric as to say the money here is enough to create that velocity while playing it in overseas markets in order to get the yield you need that you can't get here?
Yes, I think there are definitely products that are actually doing very well. I mean, investment products or funds that are doing very well today. But also is understanding what this is all about and educating them. I think even our customers today who are very familiar with the local market are also a little bit hesitant to go overseas because whatever information that they get and not really totally understanding what they're on. So we have to again educate them, and that's what even SharePHIL should do, and that's what we're planning to do. You come up with educational materials that will help them understand and help them decipher these funds and make these decisions with confidence, and hopefully understand the opportunities and the risks that go with it, and in the end, be empowered to have that confidence to invest.
What's a
wisely.
common misconception amongst all those clients who have come to you and asked for advice?
The usual because we invested mostly in individual stocks. They think funds are for people who don't know anything. And the returns are they're muted. Because these are people who don't understand, so they just go into funds. But slowly, I guess they're realizing that, yes, funds are a way to diversify, and we don't really have the knowledge of individual issues, so we have to go with the experts, and we should rely on the experts to grow our money. And they've done quite well managing this money. And there's the returns that you're getting from China now, as I said, 40%. In the U.S., it's to this year, it's about 16%. In the Philippines, it's down 6%. And if you continue to put them there, say, what am I doing when they're now? And these are now available. They're now peso instruments that I can buy for 1,000 pesos or CC access. I can do it online. I don't need to have a banker, a private banker, to access all of this. It's now democratized that I can now access all of this. It's just understanding what these are and how it works and what is in it, so that I can understand, why, this will continue to be, a story that I can bank on for a long time. Right?
Picking up on democratizing, as you often mentioned it in our last few minutes of a conversation, and we put in being an online broker. You were innovative at the time that you were set up for COL Financial. Now that there's AI and generative AI at that, how is that changing the way you operate and the way that your platform still resonates with a very young population that actually knows how to get what they want and in real time and maybe even aided by AI?
Yes, no, AI is definitely good. I say it's a tool that they can use. But again, is it reliable is another story. When you're putting substantial amount of money, you want to talk to an expert that you can trust. Of course, AI will scour the internet and get the information. But again, the reliability of this information and is, you're not totally sure because it's not 100% that what they tell you is correct.
Have you,
also
have you tried, or your team tried,
Yes,
and put in a prompt there?
Yes.
And what was the prompt, and
No,
did
usually
the AI
you
get it
prompt
so
even
wrong?
to analyze companies. They'll tell you what it is. But again, analyzing a company with its financial, statement is another relating it to the market. What drives the market could not just be the earnings. It could be a theme. It could be sentiment. It could be many things. It's not 1+1 is 2. So you have to be able to, piece this together and come up with a reliable or a conclusion that fits whatever objective you have. Because, as I said, if you look at the financial numbers of companies, they're doing very well. No problem. But why is it not going up? Oh, because there are other things that people are looking at, or the interest, or their concerns that they have that's not pushing this price. So you have to make sure that you wait for a period of time before this blows over, before you see the real values of this emerge. But in the meantime, there are other alternatives that you can look at, right? Because it's now available.
Well, give us some context there. You said this too shall pass.
It's to everything.
You've survived at least 2 financial crises.
Yes, everything.
The Asian financial crisis, global financial crisis, then the pandemic. Well, the pandemic, you made a lot of money at COL Financial. But how would you characterize the kind of problem we have now with the floodgate? With the governance issues, accountability, these intangibles that we can't even put a number on.
We have to see how this is going to be handled. As I said, it really depends on how this is going to be handled and whether you will get people to really believe that there's change. I mean,
What's it going to take to make people believe there's change?
I think that people have to be accountable. If they see people are being made accountable, and that the big fish are actually, made, are actually caught and punished, then I think they'll say there's change. But if it's again, you're just going for the district engineers, that's nothing. If you go to that level, they want to see that that's really what it is. You have to show that people are now going to now ask for, the big fish to be answerable to what they've done and make them accountable. And hopefully, with this committee that they created and the reports that they will, that something will be done about it. It will not be swept under the floor, and another story will come up and it will be buried somewhere else. I guess people have to see that this time is going to be, we're serious about this. This is no joke. They the problems that they created for this country, and they should be made accountable and even return everything, or I don't know, made, pay back what they took. I don't know. It's all this. But again, that's what it is. That's what people have to say. I guess people are tired of talk. They want action. Right? Promises, it's enough. We've seen that. I think that's what it is.
As a final point, as you're trying to encourage retail investors, the young, to take a risk, how then do you encourage them to do so in a climate where we don't know where that's going, we can't put a number on it, people still have to be accountable, and we have a huge governance issue in the country?
When you talk about governance, I think it's not in the corporate level. Corporate level, I think that's addressed. All these PLCs are complying to whatever rules that are being given. So I think the governance is more on the government side rather than companies. And companies are able to weather the storm. They just get bigger and bigger because they believe in the potential of this country. I think what people have to understand is that if you look at what these companies are doing today, they're putting their money where their mouth is. Either they're buying back their shares, either they're increasing their capex. You can see that they see the potential. If they don't see the potential, they'll be in another country. They'll say, we'll just operate somewhere else. But that's not the case. These people are putting their hard-earned money into this market or to this country, and they believe that is what it is. So I think those are the signs that people are not promoting, but they're just talking about how bad things are rather than saying how confident this companies are by investing in many other things and, investing billions of their capital in terms of, to serve the growing needs of this country. And as I said, the middle class is growing. The GDP per capita will double in 2030 from 2020, from 3,500 to close to 6,500, and that's going to be a Malaysia. It's going to be, the middle class is going to be very powerful in terms of their ability to save and invest. So we just hope that we keep that here rather than lose it to something else that is, not going to help them, will discourage them about investing, and they'll say, I'll just put it under my bed because there's no way I can make money this, So we have to help them and empower them and hopefully be able to encourage that discipline of investing.
And I wish you well on that advocacy of continuing to educate and make people aware of the investments and the opportunities here. All the best. Thank you so much, Dino.
Thank you, Kathy, for having me.
Catch us again next Thursday, 9 p.m. Philippine Standard Time on One News. You can also check out the long conversation on YouTube, Spotify, Apple Podcasts, and Google Podcasts. And if you haven't done so, like or follow my social media pages. I'm Kathy Yang. This is Thought Leaders.